a concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
Time once again to get the spoken word on the stock market directly from our chief equity strategist, John Blank, who is seated directly next to me this time. Always better to talk with you face to face than it is over the big screen. Stock market seems to be benefiting from a good earnings season right now. Volatility at a low. Is that a surprise to you? Because early in the year, a lot of people have been saying it's going to be a choppy rally.
I'm not surprised with the earnings story. I was never worried about that. And I have the idea that tech was going to lead it. I was always convinced of that. What I am surprised about is the multi-decade lows in volatility.
Yeah.
That's, in my opinion, frightening, because that will reverse more likely than continue.
And in a big way, like when it turns the corner, it's going to turn.
Yes.
Okay.
That is the answer. And that is the problem here, is complacency. That the word is that complacency. This environment appears to have legs, and it does not have legs. And one day we find out we're down 10%, and you're calling in to see what I think about that.
Yeah, I'm sure that will come. So what about valuations? Are they a little stretched here?
They are stretched. That's part of the volatility. I mean, the volatility gets this low, and the market just meanders on its trend, and a lot of what's going on with this market is just meandering on the trend towards a higher level, because there's nothing pulling it down, and so the market will naturally continue its path. And that is leading us into this valuation perspective. The problem with these situations is the USP is widening a gap with the rest of the world. And so it's going to start to bleed out the money. People are going to sell to take profits and move it out into the non-US markets. And it's going to start to defeat itself, right?
So the next rally in stocks may be overseas?
It's already on. European stocks are on fire, and they're going to keep going on fire. So that's where I would turn my attention to. Well-valued places outside the United States with solid growth catalysts like Europe.
So back here at home, how long is it, do you think, that investors are going to remain patient and wait for this tax cut before it's reflected in the market?
Terry, you know, we've talked about this. There is two camps of partisan thought out there, and either you're going to agree with me because you're in one camp, or you're going to fervently disagree with me and I'm in another camp. I think the answer, if you look back in history to the 1986 tech book with Reagan, it took 2 years to get done. And I think anybody should expect the tax decisions, just like the healthcare decisions, to be 2018 decisions if we see a normal process. And with the midterms and later in 18, if they don't get it done by April 18, they aren't going to get it done until January 19.
Okay. Fed meets in June, another rate hike?
100%. Guarantee that. 100% June, probably 80% on SEP. And then I would say December is really the question of whether there's 3 this year and not 2. That's the only question that an investor should ask. There's almost certainty to the June hike.
Is that baked in?
Baked in.
Okay. Now, you focus on tech, and within tech, the semis. You've been talking about that for a while now.
I have.
Why is that such a hot sector?
Well, you know, if you look at semiconductors, what I've learned about semiconductors is we have the Moore's Law, where you double the amount of transistors every 2 years, right? What you don't understand is that the next generation of chips doesn't outdate the older chips because they're less energy efficient. They might have different applications. You just basically enhance the richness of that ecosystem. So now we have the NVIDIA chip, which is the biggest, newest, most richest chip, but you still have NXP down here with lower quality chips, Micron and memory, all these other different types of chips. So that we're just finding that these applications are growing across. Now we have, the big one is Texas Instruments. That's because of automation in cars.
So you're also focused on oil. What's the story there?
Oil is about this range, right? And the upper part of the range, we can't get beyond 55 because the United States, North American production counts of rigs keeps going up, and production of oil keeps going up. So there's not enough of a reason to get beyond 55. We can't be below 45 because OPEC is maintaining a stance of cuts and is adhering to some of them, or at least most of them, and the non-OPEC world is following their lead. So there's been a tight range. And until you see one of those groups capitulate, which is unlikely, you're going to stay in it.
So maybe he hasn't put in a bottom yet?
It's just going to keep floating back and forth. We're down at 45. This probably will be the bottom, 55. What you really have to look at as an investor is if we break the range really cleanly. If we go to 40, that's the real news. If we go to 60, that would be real news. 45 to 55, the meandering in that range is just noise.
All right, let's talk about 3 picks here. One is in infotech. You said that remains the most attractive of the S&P 500 sectors, and then we switch over to consumer staples and materials. So within the infotech, Ultra Clean Holdings?
Ultra Clean Holdings, that's a great language. Just think about the word of that, Ultra Clean Holdings. So when you make a semiconductor, you have to make a really super clean room, a clean room with coats and all this stuff. So they're in that business of getting the semiconductor room together.
So not a janitorial
Not
supply.
a janitorial thing. Super, super clean.
And then in the consumer staples, you got Tyson Foods, recognizable
Tyson Foods.
name.
Now, this name has all the kinds of hair on it. They got investigations, looking at the chickens, price fixing, doesn't matter. That's why I like it. I like the hair on this stock because it's an A-rated value stock and it's got a growth proposition that's holding up. You got to buy stuff with hair. Tyson's got plenty of it.
And in the materials, I just leave it right there. I'm not going to go down that road. In the materials sector, you got Huntsman Corp.
Huntsman Corp, as I spoke to you earlier, this is in the top 5 of the Zacks #1 rank this morning on price green. So the chemicals is a clean momentum play and the value is still there. You got to like Huntsman. It's the leader for a lot of different segments. It's a U.S. company, and the owner is the ambassador to China.
And we're talking here on May the 10th. Do you own either of these?
No.
Okay. There you have it, the spoken word on investing, more specifically the stock market, and 3 picks to boot. With John, I'm Terry Ruffalo.